Amjad, lovely to see you. Thanks for joining us as ever. Look, you just said something to me quite dispiriting, and it's, I asked you off camera, where's your biggest growth area? And you said, well, it was the North Sea, but now possibly Asia. And therein lies the problem for Europe as well. Europe wants to go ahead with its transition. It wants someone to pay for it. It's looking at the profits from the oil majors and medium-sized oil companies and saying, well, we'll have a slice of that pie as well. Is it misguided policy from Europe? Is it short-termism?
It's definitely short-termism, especially that the energy industry needs to invest in renewables and needs the cash flow. But if you look at our industry, you know, we've made a reasonable return so far over cycles. It's very volatile, made about a 10% return over the last 20 years. And really, the increasing taxes is the last thing you want to do to increase investment in a sector. And I think Europe and the UK needs investment in this sector. Stability of fiscal regime is important, but also the energy security and the supply of internal energy is extremely important.
So the message from one of the massive players out there is, if OK, that's fine, you want to tax us more, you tax us more. But if you do that, the money for decommissioning old fields isn't going to be there. The money for new innovation from us isn't going to be there as well. Why is government after government ignorant of that message?
Well, it's been 10 years since the last increase on taxes in the UK. The UK is particularly unstable fiscally, which I think affects the long-term views on investments. You can do short-cycle investments, but long-cycle investments are difficult in a very volatile.
Goldman Sachs, surely he gets this.
I mean, there's a lot of public pressure to tax oil companies with high profits, even though the profits are not being made in the UK, for example. For example, many of the majors, it's maybe 5% now in terms of their net income in the UK. I mean, it's public. There's clearly a gap that was created by the volatility in government, and they wanted a fix. Now, it's unfortunate because it's affecting the industry quite badly. I mean, Europe has done something smaller, but I think the UK stands out in this respect. The US hasn't really taxed companies since I think 20, 30 years ago. So I think it is a volatile business. We were losing money 2 years ago. I mean, significant amounts of money, hundreds of billions in the industry, and the prices are not. I mean, they did peak, but at the price they are today, they're lower than they were before the invasion.
The revenue won't be there if the oil price continues to fall dramatically. What is your expectation for the average price per barrel this year?
Well, I mean, that's tough to say. I'm not in the business of saying. There's a bit of a Biden put. Biden has said he'll buy the SPR at roughly 70 or in the low 70s. I also think there's, segueing into what I said, there's significant underinvestment in the sector, and then it's a transition. It's an evolution, not a revolution. We need to invest in the oil and gas sector, or the gas and oil sector. Even Kerry yesterday said that we need the reduction of 30 to 40% of emissions will come from substitution from coal to gas. Indeed, the UK, the largest reduction of any industrial country in the world is the UK. From 1990 till last year, it was a 42% reduction in emissions, and that was primarily because of substitution from coal to gas. Now, again, renewables plays a big part of it. The second biggest reduction is in Spain. That's primarily wind and solar, and they're very lucky to have kind of both. But it's extremely important that we recognize that this is part of the transition. The biggest issue is, unless you have baseload energy, which is completely renewable, like hydro or nuclear, the cost of storage for wind and solar is still very, very high. Multiples, 100,000 times what you store oil or gas. And until that problem is solved, it's not sustainable unless you have renewables that are completely base load. So we will need this, when you have volatility in solar and wind, you need this base load from something else until we solve this storage problem.
But Amjad, let me take you back to the price per barrel, because the price per barrel will be the signal for investment. It will be the signal for the pace of the energy transition. In many ways, it will help everybody in the market, all participants understand the direction of travel. But at the moment, it seems very difficult to actually figure out what the price is being driven by across the world?
Well, you've mentioned just the China slowing down. That has been a significant impact on the supply of oil. I agree
is
with
the reopening going to be a significant driver of the price higher?
Yes, I think
by how much?
Well, I mean it's difficult to say, but there are 5 elements which are constructive for the price. Number one, China. I mean, China did import 14 million barrels a day in 2020. It did 10 last year. It's a very significant decrease. It's 11 at December, so the speed of coming back is quite reasonable. The SPR, the Strategic Petroleum Reserve, we have taken 220 million barrels out of the Strategic Petroleum Reserves last year in the U.S. That's 600,000 barrels a day equivalent every day. Now, that's stopping. It's slowing down. May come back, but at present it's slowing down. We also have the elements of continuing underinvestment in the sector, which is very significant. If you look at the amount of investment for developed fields last year, according to Rystad, it's 12.7 billion barrels equivalent. We produced only 35 billion barrels last year, and probably a 10 billion equivalent of gas. So we're only replacing a quarter in terms of development projects of what's oil and gas. And those sectors, primarily gas and primarily LNG, will need to force or segue the transition quite strongly.